Hello everyone, welcome back to my YouTube channel. So from this class onwards, I am going to restart the accountancy subject. So far we have completed up to rectification of errors, right? So today's our topic is depreciation, provisions and reserves. So first we will discuss about depreciation. Clear? So you are aware that fixed assets are the assets which are used in business for more than one accounting year, right? Here, fixed assets they tend to reduce their value once they are put to use. Fixed assets tend to reduce their value once they are put to use. So, this decrease in value that is called as depreciation. Clear? So this decrease in value that is called as a depreciation. So let's discuss about meaning of depreciation. See here, depreciation it may be described as a permanent, continuing and gradual shrinkage in the book value of fixed assets. Depreciation it means what? It may be described as a permanent. Permanent means once an asset's value decreases due to depreciation, it never goes back up in accounting books. Clear? Once an asset's value decreases due to depreciation, it never goes back up in accounting books. See, for example, for permanent, the example is, see here, a machine bought for rupees 1 lakh. Machine bought for rupees 1 lakh. And depreciation at the end of first year is how much? That is rupees 10,000. Now the book value is how much? 1 lakh minus 10,000. So that is rupees 90,000. See here. That is rupees 90,000. See here, even if the machine's market price increases next year to 95,000. Suppose the machine's market price that increases next year, that is rupees 95,000. That is due to high demand. But in accounting, we still keep it at rupees 90,000. 90,000. So we do not reverse or remove the depreciation already recorded, because depreciation it is a permanent loss in value in accounting terms. This is a permanent loss in value in accounting terms. Clear? That is what depreciation it may be described as permanent. And next one it is continuing. It means what here? Depreciation it is not a one time event, right? Depreciation it is not a one time event. It happens every year until the asset's useful life is over. Clear? So depreciation it happens every year until the asset's useful life is over. Clear? And gradual shrinkage. Gradual shrinkage, it means the decrease in value happens step by step over the asset's life. It not happen suddenly. Clear? For example, furniture it may last for 10 years, but its value reduces slowly each year due to its use and aging. Right? So depreciation it may be described as a permanent, continuing and gradual shrinkage in the book value of fixed assets. Book value means the value shown in accounting records, not the market price. Remember this. So it is based on the cost of assets consumed in a business and not on its market value. That is what? That is, it means a depreciation that is calculated on the original purchase cost, not the resale market value. Clear? So if machine cost, for example, machine cost, see here, machine cost rupees, I will write down here, machine costs, that is rupees 2 lakh and has a scrap value. Scrap value is rupees 20,000. Clear? Now depreciation that is based on 2 lakh minus 28,000, that is on rupees 1 lakh 80,000. So no matter what the market price. So that is what it is based on the cost of assets consumed in a business and not on its market value. Clear? So depreciation, finally, depreciation, it means what? It is the reduction in the value of a tangible fixed assets over time due to use, wear and tear or becoming outdated. Means when we use an assets like machinery, building, furniture or vehicle, its value keeps decreasing every year. So this decrease in value, that is called as depreciation. So I hope the meaning of depreciation is clear to you all. Now let's see the causes of depreciation. What are the causes of depreciation? So sorry, before that here one definition is there. So let's see. According to Institute of Cost and Management Accounting, London terminology, the depreciation, it is the diminution in intrinsic value of the asset due to use and or lapse of time. Intrinsic value, it means what? It means a decrease in the real worth of an asset, that is due to its use, aging or becoming outdated. So this is the definition of depreciation. Now let's see the causes of depreciation. See here, depreciation that happens um, due to many reasons, such as, see here, wear and tear from usage, and passage of time. Even unused assets lose value. Even unused assets also, they lose value. And obsolescence means when new technology replaces the old. Obsolescence means when the new technology that replaces the old. It means, for example, a company, it buys computer. For example, obsolescence means new technology replaces the old ones. Here, for example, computer, cost of computer, that is rupees 80,000. Clear? And after 3 years, a new model with faster speed and better features comes out. After 3 years. Clear? Even though the old computer works, it's considered as obsolete. Why? Because it cannot compete with the new one. Right? First, here we have buy a computer that is for rupees 80,000. And after 3 years, a new model with faster speed comes out. Clear? Here, but here the old computer, it works, but it is considered as obsolete. Why? Because it cannot compete with the new one. Right? That is what obsolescence. Clear? I hope this is clear to you all. Now next one is accidents or natural causes and expiry of legal rights like patents or copyrights. Clear? So these are the main causes of depreciation. Now let's see the need for depreciation. What is the need for depreciation? Why we need to calculate the depreciation? So here, see here, first need is to ascertain the true value of assets. See here, over time the value of fixed assets reduces due to use and aging. You already know, right? So if we keep showing them at the original purchase price, the business will show an overstated asset value, right? If we keep showing them at the original purchase price, the business will show an overstated asset value, means without depreciation. Then the balance sheet, it will show an overstated the value of assets, right? So here depreciation, it helps in showing the current book value. How we will calculate? Cost minus depreciation. So the balance sheet is realistic. See here, for example, a business buys machinery for rupees 5 lakh, and at the end of first year, and due to use and wear and tear, its value has reduced. Clear? If we don't charge depreciation, the business will still show the machine at rupees 5 lakh only, which is not its true value. That is rupees 5 lakh, which is not the true value of the machine. So if we charge depreciation of rupees, take it suppose 50,000. Depreciation it is rupees 50,000. Now the book value it becomes rupees 4,50,000, means 5 lakh minus 50,000. Now the balance sheet it shows a realistic figure. That is what, to ascertain the true value of assets. Clear? Without depreciation, the balance sheet it shows the overstated amount of the assets. So always we need to give the value of assets properly, means cost minus depreciation. Then the balance sheet shows a realistic figure. Clear? So this is the first need for depreciation, that is to ascertain the true value of assets. And next one, that is second one, is to ascertain the true profits or loss. To ascertain the true profit or loss. Here assets lose value while earning revenue, right? So if we ignore the depreciation, what happens? We overstate the profits because we are not recording this cost of using the asset. So charging depreciation it ensures matching of costs with revenue, matching of cost with revenue as per the matching principle in accounting. Clear? That is what, to ascertain the true profit or loss, because here assets lose value when while earning the revenue. Clear? See, for example, if a business earns rupees 1,20,000. Business earns means this is the profit from sales. Other expenses like salaries or rent, etc., that is rupees 70,000. So if no depreciation charge here, profit is how much without depreciation? 1,20,000 minus 70,000 equals to rupees 50,000. So this is overstated. That is without depreciation. So now suppose the business it owns a machinery worth rupees 2 lakh. With a yearly depreciation of rupees 20,000. Now if we charge depreciation, means with depreciation, the profit it becomes 1,20,000. It is the profit minus these are the expenses minus this is the depreciation. So equals to rupees 30,000. So this is our true profit because it includes the cost of using the machinery. So second need is to ascertain the true profit or loss. Clear? So I hope this is clear to you all. So first need is to ascertain the true value of assets, and second one is to ascertain the true profit or loss. Clear? And next third one is to provide funds for replacement of assets. It means what? Here assets need to be replaced after their useful life, that we know, right? So here by charging the depreciation each year, the business it set aside that amount as profit is reduced, so helping the accumulate funds for replacement. See, for example, I will explain through one example. See here, a company it buys a delivery van. For rupees 5 lakh. Clear? For rupees 5 lakh with useful life is 5 years. And the van it will have no scrap value at the end of its life. There is no scrap value. And if the company it charges depreciation of rupees 1 lakh, each year, the book value reduces every year. And profits are lowered by that amount. So this way, by the end of 5 years, depreciation charged how much by the end of 5 years? That is 1 lakh into 5 years, right? That is equals to rupees 5 lakh. This is our total depreciation by the end of 5 years. Here the accumulated depreciation, it helps the company set aside money, so they can buy a new van without financial strain, right? So this amount of rupees 5 lakh they set aside, so they can buy a new van without financial strain. So this is what, to provide funds for replacement of assets. So here also charging depreciation is very important. And next, fourth one is to comply with legal requirements. To comply with legal requirements means company laws and accounting standards, they require charging depreciation before declaring the dividends or profits, right? So this ensures that profits are not overstated again, and the shareholders are not paid from the capital. Clear? So to comply with legal requirements, this is one another need of depreciation. And last one is for correct taxation. For correct taxation means this tax laws allows deduction of depreciation when calculating the taxable income. So then what happens? So this prevents paying excess tax, right? And ensures correct income reporting. So that is what, for correct taxation. Clear? So this is about depreciation, means need for depreciation. That is, first one is to ascertain the true value of assets, to ascertain the true profit or loss, and to provide funds for a replacement of assets, and to comply with legal requirements, and for correct taxation. So today's class we learned about the meaning of depreciation, definition, and causes of depreciation, and need for depreciation. So I hope this concept till here it is clear to you all. In the next class we will learn about the factors affecting the amount of depreciation, and we have to learn the methods of depreciation, how to calculate the depreciation. Clear? So here I will finish today's class. So if you have any doubts, please leave a comment. Thank you.